Hello traders, this is a recap of my micro gold futures contract trade from February 12th. This is a 1-minute chart. The time down here is Mountain Standard Time. Add 2 hours and you'll get Eastern Time. This light gray session is the pre-market. And what you'll see is we scroll forward, the black is when the gold market opens up for the regular trading hours. That's the black section there. So what you'll notice right here is there's a gap between this close at 17.6 and the gap of this open at 17.4. So this is basically the target for a long trade. The purple line here, cyan, magenta line is VWAP. This cream colored line is 1 standard deviation. The blue line is 2 standard deviation. So what I'm looking to do in this trade is to buy a dip. So go ahead and scroll forward. Haven't bought yet. Right here I did buy one. I'll move this up so you can actually see the entry. So I bought one contract at 12.9 right in here. Progress forward. Did not sell on this spike. My target is up in this area. Once again, the gap. Here's a sell-off. Once again, still looking to buy dips. Okay, I'm going to scroll. I'm going to shrink this chart down a little bit. I didn't buy anything here. Okay, added another contract at 12.3, so right in the center of this candle, added one more. Scroll up. Added one more contract here at 10.1. On Active Trader at the time, there was a very large order being filled at the 10 level, so I was buying at one tick above that. So the order at 10 was either someone covering a short position or someone covering a short and going long, or a new entrant for a long trade. The gold line here is 3 standard deviation. So at what point am I going to take a stop out? I'm going to switch over to a 5-minute chart and show you this. Wrong chart, hang on. Here's a 5-minute chart. And you can see I'm buying in this section right here. I'm looking left on the chart for support. This area, there is potentially some support in here. If we start to break down below that 10 level that I talked about, that's when I would stop out. So if price started to break this 10 level of where I saw the very large order, this is where I would stop out down here and have to reevaluate on the 5-minute chart for the next support area, or immediately get back in if I got stopped out if gold started to make a move up. Once again, the target is this section to fill this gap. There's a gap right here. So now price is slowly starting to recover, and it's just a matter of being patient and waiting for this. So, my thought process as we're going through this is that, okay, we're getting the bounce up. This is good. We need to see a close above the 20-period moving average. We get this. See price moving up towards the upper Bollinger Band. This is good. A pullback is fine. It's acceptable. You would expect to see a pullback. And what I'm looking for is really for price just to continue to not close below the 20 period moving average, this blue line. And price continues to move up and up. And here we get the final push, and you can see my 3 contracts were taken out at 17.4. So I took them out right at the top of this candle. I did not have my contracts at the 17.5 to fill the gap exactly. So it was a good trade overall. It's about $169 minus commissions. Commissions probably about $9 on this trade. In terms of if you're counting waves, here we get the reversal, and you get wave 1 up, wave 2 up, wave 3 up, let's see if that's a wave 4. That's a wave 4 up. And yes, I didn't hold for a wave 5 move. I took my profits. However, there was a wave 5 move, and you see wave 5 here and a pullback. So, or your target could have been VWAP or someplace along this candle for a retracement. So that's my trade for yesterday. I no longer use volume profile. I only use Bollinger Bands and standard deviations, volume, and I look for this indicator down here is relative volume. I look for spikes in relative volume. So on a low, you would, when price is coming down, if you are thinking about a reversal trade, you should start to see some relative volume spikes. Move this up just a little bit. You should start to see some relative volume spikes. Relative volume might not be precisely at the bottom, but it's a good forewarning that potentially you're either at a reversal point or you're at a point where price is going to break down more. So your risk becomes less and less, and you know that if price does break down, you should be stopping out immediately. And then if price does reverse, then you can go ahead and take the reversal trade. Thanks. Bye.